Hi friends, in this video I'm going to talk about the power of conviction in stock markets. Most of us get or observe experts or even our friends in social media platforms or closed WhatsApp groups, Telegram groups, and also newspapers where we encounter mark investors buying a stake in a particular company. I read a news where again Rakesh Jhunjhunwala as well as Dolly Khanna and few other marquee investors bought some stake in some different small cap stocks, believing which the retail investor, without studying the companies, they started investing in the same stocks which the marquee investors invested. Now, if you ask me, okay, the marquee investor has invested, so what's the problem in us investing? Right, so there is no problem. So which is why I called this is called cloning, where we actually clone marquee investors in what exactly they're doing. But the problem is the marquee investor has done his or her research with relevant data points. They might have talked to the suppliers, they might have talked to the employees, they might have spoken to multiple industry experts, they might have read different market research reports, they might have studied the products in detail as well as the company's financial standing. So when they bought a stake, they might also know the reason when to exit. So usually the shareholding pattern will only show when they bought a stock or the percentage they hold, but it won't tell you when they exit, nor the mark investor is going to tell when we are going to exit, when they are going to exit. So now what happens is when the mark investor exits, the retail investor doesn't get to know that that mark investor has exited that particular position. And when the fortunes of the companies change after the mark investor had executed in a negative way, the retail investor will tend to lose a lot of money. Right? So this is what I call borrowed conviction. So when we don't do our research, we are going to pay the price, and market is going to charge that as a fee for the education that we are incurring by borrowed conviction. In every market cycle, we have seen retail investors doing the same mistake, buying a particular script based on borrowed conviction. Now, what should we do to tackle this problem? The number one thing that we have to do is not to buy a stock based on borrowed conviction. Number two, we have to study the stock in detail and talk to people who have done that. There are a lot of forums, a lot of research reports available in the market. We could study them and estimate how the company is going to grow. Number three, if you want to buy a stock, just wait for 20 to 30 days. Do you feel that you still want to buy? Oftentimes, due to multiple promotions and a lot of people talking about it, we might be tempted to buy immediately, which could turn out to be the biggest mistake. Number four, only when you have developed that the company is valued at the right price and also has good prospects in the months and years to come, and also it's run by an ethical promoter, you should start building positions like how an ant would do. You've seen ant, right? The ant, it doesn't build positions immediately. It just collects small pieces gradually, and the position becomes larger over a bit of time. As our conviction builds, we should increase our position. So I hope you get this message. So stay away from borrowed conviction and develop your own conviction. In that way, you tend to understand the beauty of markets very well. Now, feel free to, I hope you learned about borrowed conviction. Now, feel free to share this video with some of your friends who are investing in stock markets based on some other person's conviction. I hope they find it helpful, and feel free to subscribe to this channel and also press the bell icon so that next time when I post a new video, you tend to get notified instantaneously. Thank you so much, and stay tuned for my next video.